Hi guys, my name is Mr. Walls and I welcome you back to Software FX Academy. On this series, I'm going to be taking you through the introduction to the smart money concept. A lot of people has been asking me, what is this smart money all about? What is this smart money we are clamoring? What is it really all about? And that's the reason why I put up this video in order to introduce the people that are not aware of what smart money is, in order to introduce it to them or espouse them to the concept of smart money, to the concept of smart money. So let me take you through it and let's see what smart money is all about. So the smart money concept, what is it really all about? What is the smart money concept really all about? What is smart money? Smart money is the capital placed in the market by institutional investors, market mavens, central banks, funds, uh, and other financial professionals out there. Smart money also refers to the force that influences and moves the financial market, often led by actions of the central banks. What smart money simply means is that huge amount of money that is invested in the forex market per time. You know, if you look at the composition of the forex market, we have the retail traders, which are individuals trying to also come into the market and get a share of the market. We have the big investors like the central banks. We have Fortune 20s companies, hedge funds companies. We have the government. We have the central bank. So now the individual traders, the retail trader, they constitute a certain percentage of the market, but the people that really determines the move in the market, they are the smart money guys. They are the big guys in the market, and they are the big guys in the market. They are the big institution that has the huge amount of money to invest in this market at any point in time. And when they come into this market, that is when you have a trending market. You see the market taken to a particular direction because they determine the trend of the market, and they themselves, I tell people, they are the trend. Whether we like it or not, they are the trend. And this is just a few of them. We have the Barclays Bank, we have Goldman Sachs, we have Deutsche Bank, we have Federal Government Bank. We have so many of them, but this is just a few of them. Just a few of them. Like I told you, this is just an introduction to the smart money concept. What is really all about? So, what is smart money concept? Smart money concept is just simply applying the approach of the big guys in the forex market, applying the same approach that the same way they approach the market, just applying it into determining your own, into making the right judgment of entry and exit of the market. Just like I have before me, smart money concept is an art of taking into consideration the moves and approaches of the big investors and making sound judgments on when to enter and exit the market. Simply means trading with the banks. Their approaches the same way they see this market, the same way they pull off stunts in this market. That's the same way you want to approach the market. And trading the smart money concept also makes you put you at an advantage. We are coming to that. I'll be showing you the advantages of trading the smart money concept. So just like I use this illustration a lot. When you are in a battle with someone, assuming you are in the military, you are in a battle with someone, and you happen to know the strategy of of those guys on the opposite side. When you know their strategies, it will put you at a better position to to counter their attack whenever they come up with any form of stunt, because you already know what they're about to do. So what we have come to realize in our retail trading days is these smart money guys, they understand the way we trade. They understand all those retail concepts, and they manipulate the market in order to take out the retail, the people that trade the retail concept. They manipulate the market in order to take them out. So we have now taken a study further that, okay, if you understand the way they approach the market, to it will give us a better edge in the market. So that's why we have, take a study further, and we've moved from the retail concept way of trading into the institutional concept way of trading, which is the smart money concept. So let's go on. Now, what are the benefits of trading with the big banks? What are the benefits? This is just a few of the benefits. When you trade like the banks, you have, whenever you're taking your trade, you have huge risk to reward ratio. Huge risk to reward ratio, because you always be risking a little to make more in the market, because you have an idea of where the market is going to reverse. You have an idea of when the market, where a market is going to actually react off in the market, and you take advantage of that and you move with the market. When you trade like the banks, you have high win rates, because you are moving with the determiners of the market, the people that determines whatever happens in the market. So definitely, if you move with them always, you will always have an edge over the retail traders, because you will always win the market more. Just imagine they determine the pace of the market. That means most of the times they will be right, because they are the one moving this market. So the number third point is understanding of market manipulations. They manipulate the market a lot. You know, in the retail days when we started, then you hear people talk about, oh, this is a fake breakout, this is a fake this. No, when I started trading like the institutions, then I realized there's nothing like fake breakout. You know what these people do is whenever they want to buy, they sell first before they buy. Then whenever they want to sell, they buy in order to sell. So this is what they do like every now and then. If you don't understand this manipulation, you'll be caught up with this manipulation. So it is imperative you understand all these manipulations and how they pull it off in the market. So trading like the banks gives you a better understanding of all these manipulations in the market. Now, let's move to the next point, which is number four. Trading like the banks helps you to accurately predict the market reversal point. Just like I told you, it makes you to accurately predict a reversal point in the market, which is very key in entries and all. And last but not the least, trading like the banks actually, gives the opportunity to take sniper entries. Sniper entries. By the time we get deeper into it, you understand what I mean by sniper entries. It oftentimes on our trading channel, you see that we take trades with minimum risk to reward, and we take trades with as low as 5 pips, 10 pips. It's just that we understand where the market is going to move, and we take advantage of it like always. We take advantage of it always. Now, okay, let's continue here. Okay, let's continue here, right? Now, uh, let's move to the next slide. So, what is required to trade like the big banks? Um, okay, the introduction is what I'm doing at the moment. Then you need to trade like the banks. You must understand market structure. That is, mastering market structure, identify trends, macro and micro structures. You must understand market structure. You must understand mitigation theory, mastering order blocks and institutional order flow, identifying liquidity and market ranges, mastering institutional candles, types and application to the market bias and market imbalances. Then let's move to the next slide. Oh, this is a continuation of what is required to trade like the banks. You must understand the demand and supply zones, pricing policy, market cycle, smart money confirmation checklist, executing entries. In executing entries, we have aggressive entries, we have a confirmation entries. We can also refine our entries. You must understand psychological levels, trading psychologists, then train your eyes. Train your eyes. These are all what you need to trade like the banks. These are all what you need to trade like the banks, just like the course outline for the smart money concept. You have to understand all this in order to be able to, understand their manipulation and also trade with them. So I'll be showing you some examples of institutional candle play and market manipulations. Okay, if you look at my cursor, where I have my cursor here, oh, this is actually VIX 75. I love to trade VIX 75 a lot. Look at this very strong move for like how many days? For like 1, 2, 3, 4, 5 days in a row. It is only the institution that can pull off such a big move like this. So, but look at what happened there. There's a 5 days non-stop buy. The buyers were in place and they keep on pushing the price. And we don't buy impulsive. We don't buy when the price is impulsive. We wait for price to correct. See, I annotated some areas there, like my PO high, my mitigation point. I waited for price to return into my mitigation point. Then that's where I have my buy limit in order to take the price up. And look at what happened in the process. See, this is an area of liquidity. Price created a liquidity, then retraced back into an institutional candle area. This is an institutional candle area. Then price was taken, to the upside. And that's how they do their things. Whenever they make any move, they leave a footprint. And that's the footprint is what we look out for as an institutional traders. And that's why we have our limit orders and we wait for them to return there in order to move with them. So let me go to a much lower time frame so that this area will be more clear to you. Okay, this is the same move on 8 hours time frame. Look at these are equal lows in the market, and look at the way they manipulated the equal lows. A candle came down and took out all those people buying here because when people are actually buying, their stop losses will be below. So there is liquidity below, there is money below. By the time I get to liquidity, or maybe you should check out one of my videos on liquidity, you get to understand what I mean by liquidity. Liquidity in the forex market is money. And look at what they did there. They activated those that wanted to do break and retest. They activated their sell stop, took out those that are buying here with their stop losses, and they took the price up and returned to mitigate this area, then went further up. So this is what they do every now and then. And look at the move. They look at the move. Look at the move, and they keep on going and going and going. I can show you this over and over again in this market. This is also VIX 75. Look at this area. This is an institutional candle area. Okay. Oh, let me go back. This is an institutional candle area in the market, and look at what it did. It is a break of structure, then the price returned back to mitigate this area and drop down massively. And like I told you, uh, trading with the banks will actually give you a good high risk, a good risk to reward ratio. And look at it, this red area is just the area of my risk, and look at the reward. Look at the reward afterwards. This is just the area of my risk, and look at the reward. Look at the reward. This is almost 1 to 10, ratio 1 to 10. And that's what the smart money concept is capable of giving you if you understand it very well. Now, let me still further show you some examples. This is gold. So if you think it's only working on VIX 75, no, it works across board. You see me analyzing Bitcoin. You see me analyzing stocks of all kinds. You see me analyzing even currency. It works across board. All you just have to do is understand it, then you start killing this market. And look at it. I sent it to my Telegram group. I was even discussing with one of my students. I'm expecting price to return back to this area, then drop. And let me show you the result afterwards. As at the time I was making this video, price came into the institutional candle area, and you see dropping immediately. Now let's move on to this is GBP USD. Look at what price was doing here. Price was creating lower high, lower low, lower high, lower low, lower high, and a break of structure. And price returned back to mitigate this institutional candle. You see the drop. Look at the stop loss area. Look at the reward area. So you just have to know how to trade the institutional way, and it will give you edge over this market. Look at it. Look at the massive move. You would have held it for days. Okay. This is also a trade I took. See, there's a clear of liquidity down here. And on this trend line, there's pool of liquidity. Let me go back. There is pool of liquidity on that trend line, and look at what price did. Immediately, this is my target, over 100 pips on GBP USD. Over 100 pips, and let me show you the result afterwards. See, I've already secured some of my profits, and I'm leaving it to ride risk-free. So that's how we roll. That's how we roll with the smart money concept. With the smart money concept, that's how we roll. And I tell people, if you actually want to roll with the big boys, just go and learn the smart money concept. You can actually come to our platform, the SoftWalkFX Academy, and take advantage of our courses in order to, get a better understanding of the smart money concept. Send me a message on Telegram or drop a comment there. I will surely reply you as soon as I see it. And these are our brands, SoftWalkFX Academy, SoftWalkFX Exchange. I'm an exchanger on their platform. So feel free to patronize us anytime, any day. And this is also our social media platform. Just feel free to follow us and turn on the notification bell in order to be the first to know whenever we drop a content like this the next time. So thank you for believing in us. Like I always tell you, thank you for believing in us, and thank you for supporting us. So, peeps pay my bills, and I hope it pay your bills too. So you're always welcome to to give us that support, and we really appreciate you. Thank you, and God bless.